Welcome to the March 17th, 2025 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. Wow, we all went into correction territory for 2025. The bull market is interrupted. And how far does it go? Are we there yet? I'm going to give you some insights for the next for 2025 and 2026, something really important over the next 2 years that I believe you'll see unfold. Here we go. So at the lows of the week, the Dow and the S&P down 10% from their recent peak. The Magnificent Seven, the most popular tech stocks, they were down 21%. That's a bear market, and their multiples are contracting. They're going to weigh on the indexes, I believe, as they reach more reasonable valuations. What's up? Actually, energy. The S&P Energy Index, which is the oil and gas companies, a plus 4% versus a minus 4 for the year for the S&P and the Dow. That's resilience, and those are primarily dividend companies in the energy infrastructure space. All right, so we look here, the NASDAQ now down 12% from its peak. The NASDAQ 100 more tech heavy, 62% total return. This was a much needed 10% correction. If you subscribe to the channel, you know we've been talking about we were long overdue for this, and we were raising tactical safety as a result. There's the S&P 500, now down 9%. It was down over 10 at the lows of the week. Now, the spike is not convincing enough to say, oh, that was the bottom, but I do have evidence with earnings growth. Corporate earnings growth, 12% over last year. So you have a correction in price, earnings keep growing. At some point, you're starting to see that you've got bargains in the market. Top 10, bottom 10. What is actually still working after the equity rout? Oh, we got Progressive Insurance, Amgen, Walgreens, and CVS just woke up. CVS is a 47% return. Those companies had just been slaughtered, and the Walgreens is being taken private. CVS has a turnaround plan, so it doesn't recover fully because they were down so much. Supermicro, 34%. Veritex Pharmaceuticals. At the bottom of the list, Deckers Outdoor and poor Tesla down 39%. That was dragging on the Magnificent Seven. What happens over the next 2 years that's important? The Federal Reserve is poised to cut interest rates 6 times. Now, this checks with a Bloomberg update from their economists, and it's important because each time there's trouble in the economy or the markets, the Fed is loaded to cut rates. Why? Well, we go back to the 1970s and 80s. Paul Volcker, he said you got to raise the Fed funds overnight bank lending rate, which is cash rates, to equal inflation. And that will help bring inflation down. And he did it, and it was short-term pain. Well, we've already had the tightening cycle. That's a big difference here. We could see from 2015 to 2019, inflation and the short Fed funds rate were essentially equal. Why did they get so out of bounds? They put rates at 0, inflation skyrockets, and the government spent lots of money. Well, that's 9%. The government is now reducing spending. That'll be a positive on the inflation front. But at the same time, the Fed did not cut as much as inflation went down. This week's report, 2.8% inflation. The Fed's sitting at a 4.3% on T-bills and the overnight bank lending rate target. That is 1.5%. Divide by a 0.25% cut, you get 6 cuts in 2 years based on that difference, just to take interest rates to where they should be, and that softens the downside over the next couple of years. Thank you for tuning in. I'm Spencer McGowan, President, McGowanGroup Wealth Management, your financial weatherman. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, You're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.